Welcome back. In our top business story, a fresh wave of infrastructure spending has cemented the GCC's position as one of the most promising construction markets in the world, with Saudi Arabia offering the most opportunities for international construction companies. That was the key message of the Construction Leaders Roundtable held in Dubai, a forum with industry experts coming together to debate the issues facing the construction sector. In terms of building new roads and bridges, the GCC is only just getting started, one expert said. At the moment, it is Saudi Arabia where the most construction is taking place, followed by Qatar, which prepares to host the FIFA World Cup in 2022. In the UAE, Abu Dhabi is, quote, thriving, and Dubai is establishing itself as a regional hub in terms of technology, machinery and know-how. The comparatively small Dubai will tie the knot with export giant Australia even tighter. Already, many companies from both nations are doing business with one another, but at the fourth country briefing organized by the Dubai Chamber of Commerce, both sides pledged to boost their bilateral trade even further. Australia is Dubai's 23rd largest trading partner. In the first 5 months of this year, Dubai imported Australian goods and services worth 2.9 billion dirhams, while in return, Dubai exported goods to Australia valued at 412 million dirhams. However, the future is a two-way street. The continent offers Dubai the potential for expansion into new markets like the Far East and China, and in return, Australian companies see Dubai as the gateway towards many prosperous opportunities.
You have to keep in mind that you're talking to a small city, but an internationally reputable country when it comes to business and the transform of goods from different parts of the world. Dubai could be a gateway to a big continent, yes, into Africa, to Sub-Asia, to the Gulf countries. Dubai is a meeting hub for everybody, so small or big country can always deal with Dubai comfortably.
The Dubai-Australian trade ties are strong among many sectors, especially when it comes to food. Millions of tons of meat, poultry and wheat are imported into Dubai each year. Looking ahead, also other sectors will see a significant bilateral trade growth, experts believe, with Dubai's flagship carrier Emirates Airline playing an important role in this development.
Healthcare is an area which Dubai and this region very much wants to build on, and Australia has a very high-quality healthcare system, and so I think they can add significantly to the development of healthcare in the region. Education will be a very strong part of that growth sector. There are a number of Australian education institutions already operating here, some very successfully for a very long time. And so I think that will continue to be a strong growth area for Australia and Dubai. Emirates has been a huge driver in the links between Australia and Dubai, in particular, and the UAE and the region in total. And I think that will continue to be a very strong driver of the links between here and Australia. It's a long way, and the airlines are a pretty good way of bringing it together.
Dubai's economy exceeded expectations and grew 2.8% last year. That is seen as one reason why Dubai's stock market is flat today, while over in Abu Dhabi, the ADX General Index fell yet another day. World business news. Asian shares fell today as investors continue to worry, even as European leaders worked on new ways to stop the fallout from the Eurozone sovereign debt crisis, wreaking more damage on the world economy. Fears of a Greek default were investors' main focus again this morning as bankers at a conference on the sidelines of the International Monetary Fund World Bank meeting in Washington this weekend braced for a worst-case scenario and hoped that Europe can prevent its crisis from spreading to other Eurozone countries. Japan's Nikkei index, for instance, closed down 2.2%. That's the lowest close since April 2009. And South Korea's Kospi fell 2.6%, with foreign investors extending their selling streak into a third session. Not only are stock markets down today, also the euro, but even more so gold continued to slide after dropping more than $100 on Friday. Why the strong sell-off in the precious metals market, and what can we expect to see this week in currency trading? That's what we earlier asked Gaurav Kashyap, head of DGCX trading at Al Pari Middle East DMCC.
We've seen the weakness continue into this week's trading session. Following last Thursday's large-scale sell-off, we were expecting to see some kind of upticks, but that would have only happened if the meetings that were taking place in Washington at the IMF annual meetings would have given some kind of positive sentiments to the markets regarding the Greek situation. Unfortunately, there were no such improvements or positive comments regarding the case, and as a result, we've seen the weakness and the risk appetite severely deteriorating in this Monday's trading session. We've seen the Asian markets open very, very weak. We've seen the euro dropping across the board, particularly weak against the safer haven assets such as the Japanese yen and the Swiss franc. The US dollar remains to be well bought. We've seen a lot of the downside happening in gold as well. This is as a result of the unwinding of those long-term buy positions that we saw take gold from 1450 all the way up to 1900 levels. So on a very light economic calendar front for this week, we continue to watch for developments from the EU regarding Greece's bailout. If we have any type of positive comments, risk appetite should come back into the markets, and that should give a little bit of an uptick to equities as well as the euro crosses. If we do not have any such good news, we will continue to see the euro probably testing that range between 132 and 133, and gold should be well bought around 1450 to 1500 levels.
Samsung Electronics, the world's second largest maker of mobile phones, said it can still meet its target for tablet computer sales this year, despite rival Apple seeking to block them in some markets. The iPhone and iPad maker had successfully blocked Samsung from selling its new tablets in Germany and some smartphones in the Netherlands. The firm's Australia launch of its new Galaxy tablet has also been delayed pending a local court ruling this week. Analysts are worried another legal defeat could hit growth at Samsung's fastest-growing business and hurt its ambitions to close the gap with Apple. It sold 14 million iPads in the first half of this year. In contrast, Samsung is estimated to have sold about 7.5 million tablets for all of this year so far. Before we go, here's a quick overview of the oil, precious metals and currency markets, and after that we have the day's sports news for you.